Hi friends, welcome to my channel. So this is my sixth video on fundamental analysis. Today I am going to cover the valuation ratio. These are very important. Okay. So in this valuation ratio includes price to sale ratio, price to book value, price to earning ratio, and price to cash flow ratio. So first I am going to tell you where you will get this value and all. So I already told you will get in the ticker phenology and screener and even money control also. Okay, so here you can see that p ratio, pb ratio, and p ratio, pb ratio, and ps ratio, cash flow ratio will get here. In this cash flow ratio will get here price to cash flow ratio, and ps ratio will get in here. In the ps will get this all the things, p, pb, ps value and all. Okay, so what are the use of these things and all? So here the valuation means we are going to analyze whether the value of current market price is overvalued or undervalued. So here you can see Adani Enterprise Limited is there. The current market price is 1722. So is it good time to buy this share or not? Is this the correct value of this Adani Enterprise or not? So how we will decide this one? So what is this undervalued, overvalued means? For example, you want to buy a t-shirt, so you go to market and that he tell that the price of t-shirt is 200. So according to you it may be 100. So what you will tell? So you can think that that value of t-shirt is overvalued because according to you it is 100 only. He is telling a double of that price. So how much double? If you divide that market price by whatever you thought actual price may be, so he is telling double, two times like that. So you can think that he is telling, so this price of this t-shirt is overvalued. If it is selling at 100 only, you can think, okay, actual price also same thing, so he is also selling in same thing, so you can buy that one. So then the ratio will be 1 only. If he is selling at 50 rupees, then what you will tell? So it is 100 value, actually it is 100, but he is selling in 50 only, so you will buy that one. So for example, other example I will give you. There is a plot worth of 10 lakh. Okay, so when you went to buy that plot, that they started bidding and all. Okay, so they started bidding starting from 5 lakh. So what do you think when they started 5 lakh? So you can think it is worth of 10 lakh, but they are selling at 5 lakh, it is under value, so you are ready to buy that plot. And when the bidding started, it went from 5 lakh to 6 lakh, 6 lakh to 7 lakh, up to 10 lakh. So what do you think that one? So 10 lakh it is the accurate price, so you can buy that one. So again it went to 10 to 12 like that. So maybe you can think after 2 years the plot rate will increase, so you can ready to buy. So again it increased from 12 to 20 lakh. So then what will be your decision? Then you will think like that the worth is only of 10 lakh, but they are selling at 20 lakh, double of that, it is overvalued. There you have decided not to buy that plot. So how you are thinking that it is overvalued or undervalued? So like that here also, if that market price is this one, for example Adani Enterprise value is 1722, then what will be the actual value? So then you will decide the actual value, then you will compare with this, is it better to buy or not worth of 1722 like that. So how you will decide? So this ratio will help you. So here you can see price to sale ratio p by s, price to book ratio p by b like that. So whatever the ppp is there, it is the current market price, so that is fixed 1722 current market price. And how you are comparing with s or b, so that is different. So I'm going to tell you the price to sale ratio. So here yes is the sales per share, means per share what is the value compared to total revenue. So how we'll get to know this one? So when you go here, when you go to the profit and loss statement, net sale is this much, 26,824 crore. So this much amount they are getting per year. by selling their product. So when they are getting this much amount, then what are the number of shares per share, how much they are getting? So we need to divide. So now total number of shares is 114 crore. So when you divide this net sell 26,824.05 crore with 114, then you will get a price of one share. So whatever you will getting, that value you should be divide with the current market price. Okay, so if it is equal to 1, then you can assume, so is it correct to buy if it is worth of 1722 also. If it is, the ratio is too much high, then it you can think is a overvalue. It is less than then it you can think it is a undervalue, and it is best time to buy Adani Enterprise like that. Okay, here, then after that same thing like P by S, here you also going to see P by B. Then P by B, what is the B value here? B means book value. It is the amount of money that company can expect to receive after it sell everything and settle its debt. For example, a company in a loss, so that company decided to sell that company. So after doing all settlement, whatever the amount is remaining, if they distributed that amount among the from shareholders, so if they distributed among the all the shareholders per share, how much they will divide. So that value, whatever it is, then that we call it as a book value. Here you can see book value is 116. So if they sell Adani Enterprise Limited, then whatever the amount remaining is there, if they distributed per share, they are going to give 116 rupees. Okay, so then according to this, we can think as a, then Adani Enterprise Limited, the market price should be around 116 like that. So it should be agar if it is double also, it should be around 200 like that. But it is this much 1722. So when we divide that market price by this book value, we'll get a ratio of 14. So it is 14 times the book value. It is too much overvalued. We'll think like that. Okay. So here, if the price to sale ratio PS ratio is less than 1, that undervalue, more than 1, overvalue. Same like that. P by B also. If it is less than 1, undervalue. If it is more than 1, overvalue. So we need to buy the shares which are undervalue, or it is equal to 1 also we can buy. Okay. So like that you can decide. So other two ratio, what is there? Price to earning ratio, PE ratio, and price to cash flow ratio. First, I'm going to tell you price to earning ratio. Here in this E means EPS, earning per share. Earning per share means how much we are earning per share. So this PAT means profit after the tax, the net profit. The net profit, if we divide by number of shares, we'll get what are the profit we're getting per share. This is the EPS. So when you divide this so when you divide the current market price EPS, then it will tell you, so how much amount you need to pay to get a particular amount. Okay, for example, you can see here what is the EPS value is 9.67. So PE ratio is 178. So to get a profit of 9.67, you need to pay 178 times higher than this EPS. Okay, for example, here I can tell you, let's assume EPS is 10 rupees. Okay, it's 9.16 around 10 rupees, and PE by E ratio is 10, like that if you assume means, so you need to get a profit of 10 rupees, you need to pay 10 times, means you need to pay 100 rupees, like that. So it will tell you how much amount you need to pay to get a profit of this much. So 178 times you need to pay to get a profit of 9.75. So when you multiply PE ratio to EPS, you will get this current market price. So this should be less actually. If it is around 10 or 15, 20, then it's fine. So it is too much high. So you can think if this Adani Enterprise is a overvalue like that. Okay. So we'll go for other example. Otherwise, we'll go for Tata Steel. So here you can see the current market price is 112. Okay. So here whatever the profit we are getting, so in the profit how much it is there, net sale is 1,29,000 crores. So when you divide this 1,29,000 divided by this number of share 1 lakh, sorry, 1022 crores, then we'll get the PS value. So whatever the value we are getting here, this PS value, PB value, PE value, so if you'll get some value, but how to decide that? So you need to compare with the same product company. For example, here I took a steel company. So whatever the other steel companies are there, na, so like that you need to compare PS value with the other companies, which is better like that. So that also will get here. In the peers will get all those companies. So this is stainless steel production. So this Tata Steel is a steel, it is producing a steel company it is. So when you compare the other steel company, these are the companies are there: JSW Steel, Tata Steel, APL, Apollo Tubes, like that, Jindal Star, Jindal Stainless Steel, like that. So here you can see the PS value is stainless Tata Steel is 1.06. So from this you will come to know it is the whatever the market price is in actual price. If it is more than one, we'll call it as a overvalue. Okay, it is around one only, that's fine. So then you can see what is the book value here. Book value means I already told you, if the company sold everything, so per share how much value will get. This is 106. That is the current market price 112. So it is nearly to the book value. So we can take this is fine. If you invested now, the company goes completely on loss, then company sold also you will get 106 rupees. So that's good actually. So here you see that PB value also around 1.06. It's good actually. So then EPS, how much it is there per share, you will get a 15 rupees. So to get a 15 rupees, you need to, what is the ratio of P ratio? 7.11. So to get 15.8 rupees, you need to pay 7 times of this. So if when you multiply these two, you will get a price, current market price. Okay. So when you compare these things, you will come to know Tata Steel is good. But again, you can see GSW Steel is, it is EPS is good. So for here Tata Steel, one for one share you are getting at the end of the year 15.80. For GSW you are getting 19.59. So which is better? And again when you compare with others, na, here you can see Jindal Stainless Steel. The PS is 0.68. It is 100 value. So which is better? Here that EPS is also good, 28.46. For one share you will get 28.46. So then which is better, whether to better Tata Steel or Jindal Steel? Then you need to do a calculation and all, which is better and all. Here I have done a calculation, you can see here. So for a Tata Steel, if you invested 1 lakh, the current market price is 112. So number of shares you can buy is 890. EPS is 15.80. So at the end of 1 year, you will get a return of 14,000. Okay. Here you can see JSW EPS is too high. EPS is high, like that, 19.59. Okay. So when you do, if you invest in JSW, but here the price is 734. If you invest in JSW for 1 lakh, you will get only 734 share. Sorry, number of shares will be 136, and EPS is 19.5. At the end of year, you will get only 2,600 rupees. If you invest the same amount in Tata Steel, you will get 14,000. Okay, but when we compare this PS value, this Jindal Stainless Steel is less than 1. It is 100 value. So and EPS also too much high. So which is better, whether to invest in Tata Steel or Jindal Steel? Here you can see when you compare the Jindal Steel, Stainless Steel, if you invested 1 lakh, you will get, so current market price is 262. Now number of shares is 380. You will get from this 1 lakh investment, you will get a number of 380 shares. EPS is 28.40. So at the end of year, you will get 10,800. So according to this, you will get to know. So it is better to invest in Tata Steel or Jindal Stainless Steel. You can avoid JSW because it is overvalued. Here you can see it is overvalued. Okay, PS is 1.49 and PB also 2.90. Okay, so like that we will come to know. P means how much time we need to pay. So, but P how we are calculating here? P we are calculating based on the PAT profit. But I already told you sometimes profit may be fake. Okay, so to avoid that, we'll go cash flow ratio. Here I told you Sometimes whatever there in the net profit, that will not be there in the cash flow. Okay, here cash flow is this one. So sometimes we may get fraud like that. So avoid that one. Here here whatever that is there na, in this formula, whatever where we are using PAT, instead of that we are using operating cash flow. So this price cash flow should also we need to compare. So this will get here. So this is same like P ratio only. And if the profit, whatever the PAT is there, if that PAT and cash flow price is same, if both are same, this operating cash flow and the PAT is both are same, then these two ratio also same will be. If it is different, there is a small differentiation in this thing. So to avoid this fraud also, we can observe this price to cash flow ratio. So this will be here, price to cash flow ratio is through 3.27. So what is the P ratio? P ratio is 7.1. So somewhat it is less, then it is better. Okay, so like that you need to compare, and you can do investment, and you can do which is under value, over value, like that. Okay, so in the next video I will cover I will start with the technical analysis. Thank you friends.